Welcome back to the round trip with John Sienna and Cassidy Wong. This week, tokenized finance is heating up, and on the frontier is two big names: the crypto native firm Kraken and the traditional finance firm Robinhood are jumping in. Did you see?
Yeah, hi John. This week, definitely headline news on Robinhood planning a major expansion of its tokenized stock offering. They're supporting over 1,000 US equities in tokenized form, probably by the end of this year. So this means 24/7 trading of and also fractional ownership, and maybe a um, more accessibility for a global investor base. Right now, it's only available at the EU markets, but Robinhood, they did announce that they will have their own layer two blockchain based on Arbitrum.
Yeah, I think that's quite interesting. And yeah, I mean, more traditional finance companies launching their own blockchain, layer two. It's just expanding the Ethereum market. But yeah, it didn't start off without a debacle. So yeah, OpenAI, they were tweeting like, this isn't like our stock because our stocks are all private. So if you look at the Robinhood FAQs, it says like, when buying stock tokens, you aren't actually buying the stocks, you're buying tokenized contracts that follow their price, recorded on a blockchain. So there definitely has to be like clear comms with all this because some people probably think they are buying stocks, but it's not. Meanwhile, Kraken, yeah, they jumped in and they partnered with quite a few people, Backed Finance, and Beat.io, Bybit, and they launched xStocks. So it's over 60 tokenized US stocks and ETFs, and it's available now to non-US users. And what I thought it was interesting is they're issued on the Solana blockchain, and they could even be withdrawn to self-custodial wallets and are DeFi compatible. So Camino Finance is like one of the partners. So in theory, you'll be able to, park your assets in these protocols and earn a yield and get leverage against them. And you could do this with as little as $1. And once it's on chain, it's kind of everywhere.
Mm-hmm.
And what's funny is that, yeah, Kraken, they've been leaning in quite heavily to the Solana ecosystem when they have their own L2 Inc., which is based on the OP stack. I think that was, yeah, we'll have to see where this goes.
Mm-hmm. Yeah, besides Kraken, Bybit, they also partnered with Back to launch on xStocks. Instead of pushing into DeFi, they're integrating directly into its spot market. There's going to be over 60 US stocks and ETFs, including like the big names that we all know, Apple, Tesla, SPY. So now they will be available to trade around the clock, 24/7. So the assets, they're gonna be backed one by one to one with real shares, and this is gonna be compatible with Ethereum and Solana, both networks. And the dividends, we will see. Will probably be supported down the line.
Yeah, that'll be pretty cool. On-chain dividends.
Mm-hmm.
It does seem like we're in the age of on-chain inception because, now you could buy strategy stock on-chain and then they're just buying Bitcoin when, in theory, you could just buy Bitcoin. And then I also do think it's also, yeah, because we just had the Circle IPO
Mm-hmm.
and yeah, Circle launched a month ago, but now they already have X Circle trading on Jupiter. So it's kind of like a full round trip with that, where we might bring ICOs back, but instead of them representing this token, they might have like direct listings on the blockchain of equities because broader access and yeah, just tons of more benefits when it comes
Mm-hmm.
to trading stocks on chain.
Mm-hmm. So when I want to buy Bitcoin, do I buy Bitcoin itself or do I buy X strategy?
I mean, strategy is a leveraged bet, but then you could just leverage your Bitcoin yourself. So we'll have to see which plays out better in the long term.
Yeah.
But I don't know. Warren Buffett says like the best way to lose your money is the three L's: leverage, liquor, and ladies. So I try to abide by that.
Yeah. So adding to what you have just mentioned, Gemini, they have also introduced their own take on dShares, which is a tokenized version of US stock, starting with MicroStrategy. It's going to be available to the EU clients through a partnership with Denari. These assets are fully backed, tradable 24/5, only Mondays to Fridays, and they're also fully on chain. And finally, Coinbase, they're also waiting for the green light. We see a lot of news on Coinbase. They're in talks with SEC, and then they're seeking opportunities for tokenized equities as well. So we will see on how Coinbase will play a part of this. Maybe they will want to set up its own alliance to compete with Kraken and xStocks. What do you
Yeah, I
think?
think we might, yeah, have like a few competing like wrapped or, X stock, uh, kind of options. But I think Coinbase, they're usually not the first to do something. They want to test out the market and get the product right. I do think they're quite primed for success in setting up their own alliance because they have Coinbase Ventures, who's invested in some of the top Ethereum DeFi protocols. So, for example, they have Uniswap, Compound, Synthetics, and Aave as part of their portfolio. So, if you think about these players who control like billions and billions of TVL and getting them involved, it's really like, I mean, it's going to be next level. And in base, they're trying to get to like, a million TPS. So it'll be just as competitive on transaction speed with Solana. And they're also, working on like a privatized blockchain. So I will see, them doing this, but also I think there will be a big DeFi component as well. I mean, all this is kind of echoing the last bull market, or I don't know, maybe even the cycle before that with, in 2020 when Mirror Protocol, which was launched by Do Kwon, they started launching these kind of mirrored synthetic assets, and that took off like pretty quickly. We saw 2 billion in TVL just within like 6 months of that launching. But, the SEC went after them and like subpoenaed Do Kwon and Mirror, and then Terra Luna collapsed. So this is definitely the right approach that they're doing today, where it's more regulated. You're not going to get the SEC knocking on your door, and it's I think going to be a lot bigger because I mean Robinhood's this traditional player, Coinbase is kind of the blue chip within crypto, and Kraken's not that far behind, and then yeah, Gemini has also done everything by the book. So I think we could see like quite a number of assets trading on chain. And if you think about it, like there's 6 months to the end of the year, I think we'll be like 10x what we saw in Mir. So I'm gonna put a number at like over 20 billion in tokenized stocks trading on chain by the end of this year.
Wow, is that an alpha?
I mean, I feel like that's a kind of the low end estimate. Yeah, maybe it's actually closer to 50 billion. It depends, I guess, when Robinhood launches their chain because Robinhood said that it's actually a lot cheaper to, launch blockchain products because, the security is built in, users manage their own funds and wallets. So there's like a lot less security risk from that end. And yeah, if they just decide to move all their stocks to on-chain and then just have Robinhood app be the interface, I mean, I don't know how much users and like how much funds they have, but I would say that's probably at least 100 billion itself, probably more. So, yeah.
So with all this tokenized stocks, what does it mean for the market overall? Well, it's definitely gonna be a new phase of financial infrastructure, blending both the traditional finance with decentralized networks. And this will definitely, as you said, it will definitely be more efficient and then with more transparency.
Yeah, I think yeah, there's a huge potential for disruption because I mean, US is leading the way, and you're getting tokenized stocks that, become part of the global capital markets now. I mean, high net worth individuals always had access, but today, and now with all these X stocks, you could offer it a mirrored asset, and just pair it with speed, accessibility to the outside investors, and then do it at a greater cost because like usually these products in overseas markets, they charge a steep premium. And then now you're getting 27 access. You don't have to wake up, and stay up during US hours to trade. So yeah, this is quite bullish for US equities because yeah, now they'll have more investors, which means they could invest more in the company.
Hmm. Well, definitely, I do agree, but I don't think it's a fully replacement yet, at least in the short term. There will probably be more of a complementary rather than a replacement for traditional equities. But does this offer more volatility or stability to the market? What do you think about this?
Yeah, I think it could offer a bit of both because, with deeper markets, there's always more stability. The way like news works is they take the weekend off. So like, for example, like Trump made sure to strike Iran when the markets weren't trading. So he did it on the weekend. He gave things time to cool and settle down. But if you had like a knee-jerk reaction, like you would just be hitting sell, like thinking it's World War III, but in reality, it turned out to be nothing. And, this past week, stocks hit an all-time high. But in the moment, they probably would have taken a big hit. And, with crypto markets, you don't have these circuit breakers built in as they
Mhm.
do with, the Nasdaq and, global equity markets across the world. So you could see a 10% drop in maybe more people will rush towards the blockchain infrastructure because they don't like, when these circuit breakers go off because it means like they have to wait and sometimes they hit like 3 or 4 times in a day if something serious happens.
Mhm.
So there's definitely a lot of benefits, but they come with the downfalls. Regulators are giving up some control uh, on how these assets can trade. But right now, I think it's such a small fraction that it's not going to make a dent. As you said, it's not a full replacement yet. I think we're definitely a few years away, and who knows if, like the Nasdaq or NYSE, they build their own kind of tokenized platform, but they have some of these like traditional features that make regulators feel safe.
Well, it's definitely more opportunities for investors, and it comes with more risk.
Oh, that's the way life is. You get one, but you also get the other. I think it's been quite an interesting week, and we'll have to see, yeah, where this thing take off. Yeah, I just checked out Jupiter, and seems like there's already 2 million market cap worth of CoinX,
Mhm.
but the liquidity is pretty low with like only 103 holders so far, and uh, yeah, not that much on-chain volume, like 3.6 thousand. So yeah, long way to go to actually compete with the real true liquid markets.
Mhm.
But one interesting point, it is trading above what it is on the stock market. That's because the stock markets aren't open yet. So I'm wondering like how close will this be?
Mhm.
Even though it's not that liquid, I'm wondering if it's going to be like this is what the market opens at, and
Mhm.
the on-chain markets were right once again.
Yeah, maybe we'll report back next week.
All right, let's do that. Thanks for joining us on the round trip.